Hey guys, welcome to my YouTube channel. Okay, so for today, we are going to look on the topic to associate and joint venture under MFRS 1 to 8. We are focusing on investment in associate only. All right. So let's see example number 2. Example number 2 notes, you must refer to this particular notes on page 6. This part, consolidated statement of profit and loss. And the only differences is that most of the item, we just put H plus S, meaning to say parent plus subsidiary. But the only difference is that under profit before tax, the associate must be shown separately. But under retained profit, you must combine all of them. All right. So only these two part only lah that you need to differentiate between parent and subsidiary. All right. So let's see example number 2. Consolidated statement of profit and loss. So basically, recall that this is for the year 9. And we purchase helium is the P, because helium, they say helium acquired in year 6. And you will detect 80% from 80% equity interest in oxygen. So oxygen is 80%. And how many percent in methane? 30% in methane. So we will know because the guideline for the under MFRS 1 to 8, it says that if between 20 to 50%, it should be associate. So 30% is between 20 to 50, right? So directly you know methane is our associate. And oxygen, because they are more than 50%, which is 80%, right? So oxygen will be our subsidiary. So I mark here, up here, oxygen is 80%. So directly we know the NCI will be 20% balance, and methane, we just put 30%. Significant influence, all right? So, and then you need to look at the question also. Make sure you highlight which one is for subsidiary and which one is for associate. So if you look here, most item actually for subsidiary. If you realize this one is for oxygen. Number 3 also related with oxygen on impairment. Number 2 is on non-depreciable asset in excess. So you need to minus later. And goodwill impairment over here, we also need to adjust on the goodwill figure. And then number 4 is on associate. And then number 5 is sale of oxygen, included sales to helium. So in this case, sale of oxygen to helium is what we call as inter-co-transfer of asset. So in this case, is this upstream or downstream? This is sales of asset to investor. Oxygen sales to helium. So this is to investor. So the sales to helium, then it should be upstream. You can also refer to the note at page 4. All right. So for the upstream, we need to do adjustment on our account later lah. But this one is for subsidiary. I will show you also afterward. But the only difference is that I wanted to highlight because you need to differentiate either it is your subsidiary or associate. So notes number 4 is this 4,000 is impairment in associate. So the one that I highlight orange color is for associate. And number 6 mean ignore the text lah. All right, so let's see the question requirement. consolidated statement of profit and loss and comprehensive income, and also required to show extract of retained earning and NCI. But here they did not require journal entry lah, but I will show you also the journal entry. If you prepare the consolidated statement of profit and loss, the journal entry using equity account method for associate, method is our associate, must be, you need to have this, commonly we have these three entry lah. First, you need to recognize share in the current profit. Second is the dividend part. And the third one is the impairment. So if you have lah, because this question, they have dividend. You can see here, they also have dividend declared. Because some company that did not declare dividend, right? Maybe. And also they have question on impairment, which is number 4, not number 4 just now. All right. But number 1, usually commonly we do for under equity accounting method. Unless if you remember in our note, if you have a loss in associate, then we did not have to do any entry. If you have profit, then you need to recognize the share with our parent. All right. So the double entry is debit investment in associate. Why debit? Because they are our asset, increased asset, and credit share of profit. Because that is our equity section. So let's see how much is the profit after tax in associate. So profit for the year. So we look here. Profit for the year is in method only, which is 50,000. Don't forget to look at this above part, the 1,000 figure. So we take this 50,000. I put in bracket, 50,000, but multiply by how many share of significant influence? 30%. So you just multiply by 30%, then we get 15,000. So above here, don't forget to put RM 1,000 in above here. And over here, I just put 15 debit, and we also credit 15. Okay. Remember not to forget to put the narration. Okay, let's see B. Dividend income from Metin. So let's see how much is dividend income. And okay, the double entry is why we debit the dividend income, because revenue. Why we debit the dividend income from Metin is that we transfer the revenue to Metin and it reduced the revenue. All right. So reduce revenue, we debit back. And we reduce also the investment in Metin. So we, the investment in associate lah. So we credit back. So let's see dividend, which is dividend income from Metin. Okay, so let's see here from Metin side. So you look at how much dividend paid. We take from dividend paid. Wait, I change the highlighter. So we take from here 10,000. Wait, and again is 10,000, and again we need to prorate to 30% only. So dividend income should be 3,000 debit, and we credit another 3,000. All right, let's see number C. We look at note number 4 for C on impairment. So for note number 4, it mentioned that as at year 9, it was determined investment in associate was impaired by 4,000 ringgit. So this one we just do the simple double entry, we follow the question lah. So for impairment, we need to debit a group profit and loss, which is 4,000. And we will credit also 4,000. So this one directly taken from a question lah for impairment on investment. Right, so this one also will reduce the investment in associate because of impairment. So we need to credit the investment. All right, let's see how to prepare the console. So for the revenue, COGS, if you recall that from the note just now, it just H plus S, right? So only H quarter, ataupun in this case is, what is the name of the company? Helium plus oxygen only. So for the revenue, it is 1,000 here. So we're doing for oxygen. I change color. So revenue, H plus S. 1,000 plus 800. 1,000 plus 800. But remember, in note number 5, we mentioned something on sale of oxygen. They said included 50,000 sale to helium. So for this part, the 50,000 we need to exclude because they are already included in the sales to helium. So you need to minus this 50,000. All right. So we minus the 50,000. Okay. Now, minus the 50,000. This one we refer to note number 5. So after you minus 100 plus 800 minus 50, you should get 1,750,000. Cost of goods sold, we just take the same figures from cost of goods sold up here, which is 600 plus 500. Only H plus subsidiary only. 600 plus 500. But remember just now we also have note 5, which is the cost from the purchase of intercompany transaction just now. The note 5, the same. So you need again to minus the 50 ringgit, but you need to adjust the cost. So let's see question number, this one I'll show you in working number, this one just put here lah. We see in working number 1. So for working number 1, I just show you here, we are referring to note number 5. Working number 1. All right, if you look at number 5 here, it says that oxygen include 50,000 sales to helium. So directly we know the 50,000 is our sales value. Oxygen sales to helium at cost plus 25%, which is 1.25. So that is your markup margin. So the equation is that P equal to C multiplied by 1.25. So in this case, we just twisted the figure. C equal to P, in this case, 50, right? The 50,000. So I just change directly to P, 50,000 divided by C, the multiple side we bring to this side, so it will be divided by 1.25. So the answer should be 40 for C. So how to get profit? Profit equal to P minus C, right? So your P just now is 40. Your C is, sorry. P just now is 50. So your C from our calculation above there, which is 40. So we get profit of 10,000. But out of this profit, 10,000 profit, sorry. They mentioned that 1/4 of this good still remain unsold. So this will be parked under cost of goods sold, right? So the profit from the profit of unsold good should be equal to 10K divided by 4 because it's 1/4 only. So that's why you need to divide it by 4 or multiply by 25% lah, 1/4. So you should get 2.5. So that is profit of unsold that you need to charge to include inside your cost of goods sold. All right. So you need to plus here in this equation. So you need to plus the 2.5. The profit from the unsold part. So in the end, after you plus and minus here, the equation in the bracket, you will get 1052.5. And of course, less revenue, less COGS, you will get gross profit. So we will get a balance of 697.5. And as for the expenses, we take also again. Let's see from the question here. Again, expenses 150 plus 120. 150. Oh, sorry. 150 plus how much is that? Oh, 120. 120. And then let's see notes number 3. They say that goodwill on business combination of oxygen was impact 24,000. This is in year 8. And there was further impairment of 8,000. So this one you need to charge the 8,000 for impairment year 9. Plus 8,000 from notes number 3. I just remark here, note number 3, impairment year 9. So after you add all of them, you will get 278. Other investment income, we just take one question. Other investment income is 10. 10 plus 2 only. All right, this 10 and this 2. It's okay. 10 plus 2. Again, similar with the expenses lah. Just H plus subsidiary. So 10 plus 2. So we get 12. And next, share of profit of associate. So just now I mentioned that share of profit from associate need to be separate. You must have a separate section. You cannot just combine with profit. All right. So the profit after tax, let's see for associate. Profit after tax is this one, 50,000. This one just take profit after tax is 50,000. But multiply by 30%. The percentage, so it should be, but you need to minus another one. Note number 4, impairment of associate just now, the 4,000. Or you can double check from the double entry, the journal here. You need to adjust from here. This one, share of profit. So this one will reduce the profit. How do we know? It's on the debit side. Normal entry for profit is the credit side, right? So if you put on the debit side, then it should be reduce the profit. So that's why after you multiply by 30%, multiply by 30% first, then you minus 4. The 4, you need to refer to note 4 on the impairment. All right. So after you multiply and minus, you will get 11,000. And then as usual, you minus and plus everything, then you should got 442.5. And then we take the taxation figure, H plus subsidiary only. So let's see tax. The tax is 109 and 42. So we go here, tax 109, we plus with 42. So you should got 151. So it's direct, just H plus subsidiary only. And then you got the balance of 291.5. So this is what we call as net profit for the year. And then at the same time, we have revaluation surplus. So you just refer to notes number 2, revaluation surplus, the 10,000 over here. Non-depreciation fair value at 10,000 in excess of carrying amount. So revaluation surplus, 10,000, you need to add back because it's a surplus. So we get total comprehensive income of 301. So you just plus with the net profit for the year, 0.5. So the profit attributable to owner of the parent is, you just directly take the 291. Actually, it's supposed to be shown in the working. So I want to show this one first lah. Non-controlling interest under working number. I think inside our notes again, I put working number 1. I just remark the changes now because why just now I show you working number 1 right over here. So maybe this one is just put 1A to remark where to find it. This one is working number 1A. Okay. For working number one, actually it should be shown here lah. Okay, let's see how to get NCI share of the result of operation in our subsidiary. Sorry, in our associate. So first you need to look at the current profit after tax in oxygen. So let's see inside the question. Current profit after tax. Okay. Oh, sorry, in oxygen. So 140. Can you find the 140 over here? Current profit in oxygen, 140. So I just drag down 140,000 also. And then you have the URP, you need to less unrealized profit just now on the closing stock. This one we need to adjust. So how much is the URP just now? We calculate in working number. This one can refer lah. Working number 1A. Just now is 2.5, right? So you can go here, up here again. This is the one. How to get 2.5 profit of unsold? The 2.5 over here. So after you minus, you will get 137.5. But then the NCI is how many percent? 20%. NCI, because ownership is 80%, so the balance is 20%. So it should be 27.5. So this is what we call as NCI share of operation of oxygen, which is our subsidiary lah. So the NCI here, we put, how much is the figure we get just now? 27.5 over here. So I put here 27.5. So profit attributable. If you look here, profit attributable to owner of the parent should be, how to get the figure for owner to the parent. If you realize just now, our profit is 291.5, right? I got from here, net profit for the year. Don't take the comprehensive income yet. We wanted to calculate the net profit for the year only. 291.5, but we minus the NCI share over here, 27.5. So the balance should be how much owner's profit to the owner of the parent will be balance 264. So you just minus these two. That's why you need to get the NCI first. All right. Next, to get the total comprehensive income attributable to, so just now we have the 264 of parent, and the NCI just now is how much? 27.5. This one just take from here. But now we need to take the comprehensive income attributable. So because we need to take care of this 10,000 over here. All right, because we wanted to distribute also the comprehensive income. So you need to plus because it's an income. Which is 10,000 multiplied by how much is for owner? 80%. And the NCI, how many percentage? Also, we use the 10,000 and the balance is 20%. So you will get the answer of 272. Make sure you double check the calculation part. And 29.5. That is the attributable of comprehensive income. So let's see the consolidated statement of changes in equity part. So for the balance of on the 1st January, we need to adjust. So let's see this second part. You need to do the working number 2 for the group retained profit brought forward. This one you need to do a little bit on question. So we have balance H and oxygen balance, but you need to adjust on the pre-acquisition profit. So let's see first. I just put H lah for helium balance. So let's see from question. Return profit brought forward. We're looking on. So should be, I just highlight different color lah, easier. Return profit 50,000. And the O balance is 60,000. And the methane is 50,000. So we are talking about return profit brought forward. So you need to look at the beginning of the year. All right. So I remember these are 50, 60, 50. Actually, it's quite similar figure. Right. So the H balance is 50, right? Sorry. When I went up here. Down. H balance. Oh, sorry. Should be 50. This is 50,000. I just put 50 lah. And then you need to adjust for O balance. All the return profit brought forward or carried forward, you need to edit all the subsidiary, headquarters, H parent, subsidiary, and associate. You need to total up all. So that's why you need to do the working over here. So balance in O just now is 60. This one given in the question, right? But you need to adjust for the pre-acquisition. So you need to minus the pre-acquisition. So how to get the pre-acquisition profit? 40,000. You just look at the notes. Number 1. In helium, the beginning of the profit is the accumulated profit is 40,000, right? So you take this 40,000. This one in oxygen. So we take 40,000. The differences the opening and the closing. Then you got the balance of 20,000. Just put here. 20,000, but you need to multiply by how many percent? Ownership in O, 80%. So you will get a profit of 60. Pre-acquisition profit. And then we do the same for M, which is the associate just now. The balance just now from the income statement is 50. And then again, similar method, you need to minus the differences between the pre-acquisition. You go here in notes number 1 is how much? 20,000 here. This is the 20,000. So minus 20,000. Similar like the above method also lah. Like O also. So you got 20,000 differences. So you will get the figure of 30,000, right? But how many percent only? Only 30% significant influence, right? So you will get the answer of 9. Just multiply, then you total up all, then you will get 75. You need to adjust for the impairment of goodwill in year 8. This one you can refer to notes number 3. All right, the 24,000 we need to adjust also because we need to take care from the beginning of the year, right? So you need to adjust the impairment of goodwill of 24,000, and then you get a balance of, finally the answer should be 51,000. So this 51 you'll put inside here. And then we take the profit of the year. You just take from the one that we prefer here, 264 from here, and 27.5. So this one just take from the statement that we prepare, 264. For NCI just now is 27.5. And other comprehensive income is only the revaluation reserve, which is the 10K just now. The surplus, but out of this 10K, you charge 8,000 to the parent, 80%, and another balance is 2,000 we charge to NCI, or you can refer to this section lah, this part, right? The comprehensive income. And then dividend, you just take from the question. We go here, let's see. Sorry. Dividend paid, we just take from here. All right. So in the end, you just total up all this, you will get 285 as retained profit. But this one, we don't have the figure lah, because we don't have balance on revaluation reserve. We don't know, not given in the question, and also NCI also not given in the question. So that's why this part we don't know lah. So we just put XX lah, whatever is the figure. All right, except for this one lah, you need to get the figure of 285, balance of during for the date on the 31st December year 9. All right, but actually you don't have to show the working number 3. I can show you the solution also. You will get similar figure of also 285 in the end lah. But another way is that you just, dividend you need to minus because this is dividend paid. Sorry, this is adjustment part. You need to minus, this is dividend paid. So all of this you should got the answer of 285 in the end. All right. So make sure you try the extra question later. similar example, but combination of statement of changes in equity, comprehensive income, and also we have example combination also with the consolidated statement of financial position. I think that's it. Thank you.